and local shares are set for a tumble. This is the right this morning. The JSE All Share falling about 1.6% to close at a near 7-week low on Tuesday, extending those losses for the second session, and the pressure by tech companies, miners, industrials and retailers. Yeah, you name it. Let's speak now to the director at Sanlam Private Wealth, Greg Katzenellenbogen, joins us now for a quick markets update. Greg, good morning to you and thank you for your time. Let's start with your overview of the markets and how they're faring in early trade.
Well, in early trade, the markets are deep in the red here. In South Africa, we're down about 1% across both the top 40 and the Johannesburg All Share Index. The US futures are slightly down, not as bad. We are, the South African market, because it's quite big in resources, is under a little more pressure. And that's because two main points is that the US government are now nearer solving their debt ceiling deal. What they call X Day is approaching. That's the 1st of June, where if they don't raise the debt ceiling limit, America will technically default on its debt. I don't believe that will happen. We've had this many times over the years, and at the end, there's always a deal that is made. It's unthinkable that the US won't be able to pay its debts. And then the other problem is that there was huge expectations for the recovery when China reopened after locking down for COVID. And while there has been an initial bump up in the Chinese economy, the Chinese are struggling a little bit, and it looks like it might be quite a battle to try and get the 5.5% GDP growth that they're looking at. But things are, generally, it's just worries that the Chinese economy is not as strong as everyone imagined, and that is having a feed through to the global markets.
Let's talk about the leading business cycle indicator in South Africa. That has dropped to 2%. It is from a month earlier in March this year. This follows a fall in February. Help us make sense of this data and, importantly, its significance.
Well, it's very easy to explain. South Africa's economy is caught between a rock and a hard place. Virtually every company that reports results now talks about the effect of load shedding. You might have seen recently Astral, the chicken producer's results, spending hundreds of millions, like 50 million a month on diesel. These things are not sustainable, and where everyone thinks that South Africa might eke out a little bit of growth positively, it looks highly unlikely. We might even get negative growth. So the business cycle is just an indicator that things are not good in the economy, and the significance of that is that unless things start to improve, we can get a handle on load shedding and things like that. South Africa's growth is it's going to be non-existent, and that's not good, coupled with the fact that the Reserve Bank is highly likely to raise rates again, even though inflation is not demand-driven, but it's putting the South African consumer and the economy under a lot of pressure with the Reserve Bank's mandate to try and protect the value of the currency. But unfortunately, that doesn't seem to be working, as you saw what happened when the currency fell out of bed recently. So it's just another indicator that things are tough in South Africa.
Let's talk company news. Nampak releasing its interim results for the 6 months which ended on the 31st of March 2023. How's their performance?
Well, it's quite shocking, and it actually is quite sad. I mean, those of us who've been in the markets for many years, this was a fantastic company, Nampak. It was one of the better companies on the JSE. It's been reduced to a shell of its former self, and they announced they're going to raise R1 billion in a rights issue. Shares already under a tremendous amount of pressure, and the thing is that it wasn't helped by the wrote-off about there was 500 lost in exchange rate differences from Angola and Nigeria. plus about 2.5 billion in write-off. So it's been a terrible time for this company. They'll have to sell a lot of assets, and it's going to be a long, hard road to recovery for this company.
Let's conclude the conversation with the operator of Avis and budget car rental groups. That's Zeda's shares. They jumped after the company said it expects basic earnings per share to increase by between 25 to 30%. Headline earnings per share, those also expected to rise by between 3% and 5%. Talk us through those numbers.
Yeah, so the difference between the basic earnings of 25 to 30 and the headline earnings of 3 to 5% is essentially mainly due to adjusting for profit. There was a sale of a property of 14 million in the current period, but there was also they impaired intangible assets of about 50 million in the prior period. But it's a strong performance from them, and it's really primarily driven by their leasing business as well as the corporate travel. Corporate travel has picked up a lot. You only have to fly between Johannesburg and Cape Town to see that you can't find a seat on a plane. There's no such thing as wanting to travel tomorrow and booking. These things are sold out weeks in advance. So there's tremendous amount of travel. And so for the car hire companies, they're doing exceptionally well. And we have a bit of a lull now as we go into our winter, but we've also in the summer seen a tremendous amount of inbound tourism for South Africa, and that's helped them. So a solid set of results.
Greg Katzenellenbogen is the director at Sanlam Private Wealth. Thanks indeed for that markets update. All right.